100% a week,
Hmm.
which is certainly doable, and it's 100% doable because you can hit like 2 1 to 50s in like a week. But the
Hmm.
idea is you shouldn't be saying, okay, I have to go and find another like 1 to 10, or I have to go and find like a 120, because that's where psychology really comes down to it. Otherwise, we'll just end up getting greedy and just sticking loads of lots on.
Yeah,
Um,
definitely. No, and another thing I'd say is don't have like a minimum. Just say,
yeah,
okay, I'm gonna take the best trades that I see, and whatever comes from that comes from that.
because if you think of it that way, the idea is you shouldn't be thinking about making money. Like,
Hmm.
you remove the idea of money from it, then you as a trader, you'll become a lot better, because you're thinking about money, you get greedy um and you think emotionally. But when you just
Yeah.
think about being right or wrong, you'll see like a change and be like, and also what ends up happening is if you start thinking about money, and it's something that I've noticed as well in myself. It's just like if you're trading £100 account and then you go and do FTMO and think of a £500, sorry, 50 grand or 100 grand account, um, you can end up getting like greedy. Because for me, when I was trading £100 account, like £1, even if I lost 1%, it's still fucking burnt a lot. So losing like 200 plus or like even 500 FTMO now, because I've been able to fix that, like changes like your mentality when it comes down to trading as well. Like
Hmm.
Cameron said, you look for the best opportunities rather than just trying to get into anything.
Yeah, definitely. So okay, let's start it up. I just gotta admit, people. All right.
Guys, for someone who's fairly new to this, I'd be interested in finding out how to identify the specific POIs that are more highly probable
Yep, no
compared
problem.
to.
Sorry, could
Thank
someone put yourself on mute if you're not talking, just because it echoes?
Yeah, that's not a problem. Well, probably this one's just gonna be about back testing, but I definitely do one on like high probable POIs and stuff like that. So let's get it started. Can everyone see the screen? Are we good in that? Is it working?
Yeah, I can see it.
Okay, nice. Right, so all back testing is if you, so the way I thought about it is I'm quite new off school, so obviously I did revision, and back testing is just basically the revision. So what you do in school is you'd get exam papers and then you look at the mark scheme, and that's all back testing is. It's just looking at the mark scheme. So what you want to do is, especially at the beginning where you maybe don't understand, is you want to reverse engineer stuff. So what you want to look for is you want to look for, where a pullback ended and an impulse began. So you want to look for those big moves, and then you want to see, okay, the pullback came into this area. Check all time frames, because there's a lot there. I know the generic ones are 1 hour, 2 hour, 4 hour. Pardon? Oh.
Sorry, apologies. Carry on.
Oh, no problem. So, but what I found is 6 hour, 8 hour, and 12 hour are very useful as well. So then you want to, once you find your POI, you want to check for your lower time frame structure. What's it telling you? What can you see? You want your lower time frame confirmations, break of structure, equal lows or highs just above or below the POI, stuff like this. And now we go on to continuations, our take profits. Where should we take profits? Because yes, getting into the trade is good, but if you mismanage the trade, it can be the difference between getting 50%, getting a gain of 50%, or getting a gain of 10%. And obviously we prefer 50%. I'm very big on order flow as well. Basically, you just want to question everything. The really good part about the WWA method is there is a reason for everything. If something didn't do what you expected it to do, you can find out the reason why it didn't do that. And then again, you want to be honest with yourself. Like, back testing is there to help you catch trades that you would not normally catch, or help you catch the trades that you would normally catch more consistently. So you have to say, you know, would I have caught this trade? If I didn't, you know, it's very nice saying in hindsight, yeah, I would have caught this trade, you know, I would have got this would have been banging. But would you have caught it if you didn't see all this stuff in hindsight? Would you have, you know, you need to find things that tell you that this is going to happen. You need to find things, you know, little tells that tell you, okay, this is going to happen. Pardon? Cool. All right, and then, yeah, it's great that we're now catching these trades, but you don't want to you don't want to stop backtesting once you've got good. You want to continue to backtest so you can get better. You know, that realistically with trading, especially with the WWA style, there is no perfect trader. Like, you can always get better, and that's what I really like about it. Say you catch a 1 to 100, okay, next you can aim to maybe catch a 1 to 200. That doesn't mean force it, but you can have that goal so that you always have a goal in mind. Okay, so, and then the last thing I want to say is just journal everything. You want to write down your thought process, because what you might realize is that you're actually thinking about things wrong. And if you're thinking about things wrong and you're not writing it down, then you'll never notice that you're thinking about things wrong. So just, even if it doesn't seem useful, it probably is. So just write down everything. All right, so let's put this into motion. So I did this yesterday. So I don't trade USD CAD at the moment. So we're just going to apply this. So on the monthly, I'd say we're bullish. On the weekly, I'd say we're bullish. Daily, we are bearish. Sorry, ignore all the writing. It will come. It'll be right. Let me just. How do I do that? There we go. 4 hourly bearish as well. Okay. So the past. Let me take this off now. All right. So let's drop down into this. Okay. So POIs. The first let's look at structure. All right. Lower high, lower low, lower high, lower low, lower high, lower low, complex pullback. So that's our structure on the 4 hour. Right. So again, I said check all time frames. So we'll go to, before we do anything, we'll just look at structure, because it might, you know, on the 4 hour we might be bearish, but on the 1 hour we might have had a break of structure or something like that. So it's always good to just check. So 2 hours pretty much the same. Lower high, lower low, lower high, lower low, lower high, lower low, and then whatever this is. And then 1 hour is the same. You can maybe, if you really wanted to, consider this a break of structure on the 1 hour, but I wouldn't. Right. So that's that. Now let's look at it. So POIs. Well, this was our lower high on the 4 hour. This was our lower low. This is I'm only gonna go over continuation trades, so I'm not gonna be looking for any buys in this, because our structure has said that, especially on the 4 hour and the daily, that we're bearish. So I'm only going to be looking for sales. It's important to note that it's very rare that all of these time frames will align. So just keep that in mind. All right, anyway, 2 hour. So what we've seen on the 2 hour, we formed our lower high and we formed our lower low. On the way up, we'll see this coming. We'll see price moving up. Right. So our 2 hour POI. Well, first let's start with our 4 hour POI, which is quite big. So our 4 hour POI would be this, from here to here, like so. That's our 4 hour POI. So we can keep that in mind, 4 hour POI. Our 2 hour POI, we've got this with this clear imbalance underneath it. So we'll keep that in mind. And then the 1 hour POI is all the way up here. Right. So what we want to do, especially at the beginning, I feel like at the beginning, the easiest way to catch trades is actually lower time frame watching lower time frame price action within our hourly POIs. So if we look, we've got the 2-hour POI with the imbalance underneath. So this is really clean. As you can see, we come into this pretty much perfectly, and then we come out. So let's drop it down to the lower time frames. Not that one. This one. All right. Now it shouldn't look so cluttered. All right. So first off, we have our first 5-minute break of. Let's drop down to 5 minute actually. All right. So first off, we have our 5-minute break of structure. This is our low, which caused this high. So here, let me get that a bit nicer. Here, we break structure. Now, normally, what you'd want to do, this is a bit of a funny one, but normally what you'd want to do is your POI would be the candle which caused the lower low here. But in this case, this happened over spread hours. So I wouldn't take an entry here anyway, but we'll go over it. When it happens over spread hours, this is our candle which causes that lower low. Here.
Sorry, one quick question. What do you mean by spread hours?
Oh, right. Basically, at 10 p.m. UK time, you get the markets close for a couple of minutes, usually between a minute and 3 minutes, and spreads get crazy at this time because what happens is you have next to no volume because the algorithms that work out the candles and stuff like that, they have closed, and the reason they close is to check that everything's running smoothly. So they close, and so during this time there are no buying and no selling while it's closed. And as you'll see, you often get, if I go down to it, you often get crazy, like price action looks really weird during this time. Like this is price action during this time. As you can see, it's really crazy because there's next to no buying, next to no selling. So one buy can make price shoot up and one sell can make price shoot down. And because of this, spread is the difference between the buying price and the selling price. So because the buying price, because when one person buys, there's no volume, the buying price shoots up. And when one person sells, because there's no volume, the buying price shoots down, the spread goes really crazy. So what we'll see is we'll see spread go up to 10 pips for an hour or so. And it's the same time every day. It's the same when market opens at the beginning of the week. So during this time, it's not optimal to trade because we could have, if I go down to the 5 minute, and I'll actually draw it. So say we wanted to take this trade off this candle that broke structure. So, we put it here, and let's say we actually account for spread. The normal spread on USD CAD is like 0.3 pips. So let's just put it up let's just put it there, right? So what would happen was, say you buy in here. This is where you buy in. So this is this is where you get in for the sell. This is where you get in for the sell. Right, let me write sell. Right. And spread would be 10 pips. So up here or wherever it is, you get stopped out immediately. The moment you enter this trade, you get stopped out because spread is so large. So that's why we don't trade. I'm not sure what it is around the world, but it's 10 p.m. time BST. So I'm not sure what it is around the world, but it happens every time, every day. And it's because they shut down, all the brokers shut down the things they use to track the markets and just make sure that they're working. Yeah, there you go.
And that's
5.
across all the currency pairs, not just
all
specific
that,
ones.
yeah, all the currency pairs at the exact same time.
Wow, I didn't know that. Thanks.
Yeah. So if you ever here I'll show you. Wait, let me see. I know. But when market opens, look at the spreads, and they'll be about obviously that on MT4 it does it in pipettes, so you have to divide it by 10, but there'll be about 10 to 15 pips, which is ridiculous. So you don't want to be trading during this time. Yeah, there you go. All right, so that's that. So sure, we could get an entry here, but we'd either not get tagged in, or if we do get tagged in, we get stopped out pretty much immediately. It normally lasts for so basically the more volume that's traded, the less time it lasts. So obviously on EU and GU, it doesn't last as long as something like GN, which has high spread anyway. All right, so let's go back to USD CAD. All right, so where would we be looking for entries then? Okay. All right. So now we have something like this, where we've come out after. We're now in London session, which is the session that we really like. So, London and New York. So coming into London, we pretty much immediately break 5-minute structure and we leave clear imbalance. Right now, dropping down to a lower time frame, we'll go to the 3-minute, then we'll go to the 1 minute. So on the 3-minute, we can see that this would be our POI. So on the 3-minute, we've got 1 POI, but as you can see, it wouldn't work out. So you could still take this, but this is why you've got to look at multiple time frames. When we go to the 1 minute, what do we see? Fucking hell. Have I gone past it? No. All right. 1 minute, we see 2 valid POIs. One is here. This is the POI which caused the break of structure. But we also have an unmitigated POI here. So what I would do in this situation is, you can be greedy. Like sometimes it's fine to be greedy and have a 2-pip stop loss. But if we have a stop loss like this, that's only 2 pips more. So you're still looking fine. So what you have is, you take both of these entries. Either you do it like this and have your stop loss here, or here, probably here, and get stopped out, and then you have another one here, like so, and enter in on that one, or you just move your stop loss here, and you risk 0.5% on both of these positions. In this scenario, you'll risk 0.5% on both of these positions, but you risk 0.5% on both of these positions, and you get, so even though you're seeing less risk to reward, you're not taking a loss here. And realistically, what we care about is, especially at the very beginning, we care about account preservation. The longer we can stay in, the more we have a net zero gain. As long as we're having at least a net zero gain, that is positive, because you've got to think that is a lot better for your psychology. Going, okay, for the past month, I haven't lost. Whereas, imagine if you were just starting out, you hop on a live account, boom, down 20%, because you're trading risk. You're trying to jump into things, and you're risking 1% here, and you're not even considering this. That's going to have big effects on your psychology, which is, especially this early on, you don't want to be tanking psychology. Like, psychology is the most important thing at the moment, because if you believe, it's one of those cases where if you believe that it will work, you can will it into existence through back testing and things like this. But if you start to doubt yourself, and you start to doubt, you're going to look for cheap methods. You're not just going to trust the process. And that's what we've got to do, because, you know, you've just got to look in you've just got to look in the Discord to see, you know, April, June, and even July students who are already killing it because they're trusting the process. So we know the process works. We don't have, you know, we're not in the position of Wally, Wakara, and Alex where they don't know the process works and they've got to figure out the process. We know it works. So just trust it, work on psychology, and you'll get it. So where would we take profits? Okay, let's have a look. So if we're going to continue structure, you could have it at least here, but, you know, you're not going to want to take it all the way down there without taking some, you know, some precautions. You know, you know, we could react off an imbalance fill and then go slightly higher, because at this point in time, this lower high is not confirmed because we've not had this lower low. So we could continue in a complex pullback and go like that. So we need to figure out ways to keep our account flowing. So even if we take, you know, here, this is a very good point that we could react from. We've got clear imbalance. Oh, wait, no, sorry, it's here. So, you know, we could take some partials here. That's not even bad. This one's a 22-1. You know, if you're taking out, even if it's only just 30% that you're taking out, that's still almost 7%. Like, it's, you know, and 7% in literally a couple of hours. You know, we don't want to be getting greedy. I imagine people that have traded other methods, you know, you kill for 7% in a day. But, you know, 7% in a couple of hours, that's great. So yes, we have our final take profit here. You know, we can leave 20% running to this point, but we need to find areas that we could react off. And if we don't see it on the 1 hour, we maybe drop down to the 30-minute. You know, again, nothing's jumping out, but something like this, you know, we could have a reaction off here. You know, and we have a little reaction, but it's not sustained. So that shows that it's not high probable. All right, so one sec, I'll look at that in a minute. So that's that trade. We're taking it down to here for you know, this is 1 to 78, this is 1 to 93, this is 1 to 33, 1 to 40. Even if we're only holding 20% down here, 20% of 93 is 18%. So that is an 18% gain. You know, for this, that is a 8% gain. That's still a lot, even though we're only holding 20% of our original 1%, so technically 0.2%. Okay, so let's go on to our next zone. All right, so our next zone is this. You know, we start to form a mini uptrend. Obviously, it's not. It's just a complex pullback because this is high, this is high, this is low. But when we go down, we leave a lot of imbalance, which is nice. We like to leave imbalance. It's actually one of my key things. So we leave imbalance on the 15-minute. We have this. And how you would spot this back testing is you'd go, okay, we came up and then we came down and we saw a big move down. Why did we see that big move down? And then you go, all right, we must have come into a point of interest. You know, let's see if we can see it on the 1 hour. So it's not obvious on the 1 hour. We drop down. 30-minute. It's still not obvious on the 30-minute. And then we come to the 15-minute. Okay, this is the reason why. 15-minute. This candle is engulfed by this one. Because, you know, obviously this is our last buy to sell candle, but it's not engulfed by this one. So then we go to this candle. Okay, this candle here, all we have to say is that the wick, the body of this candle closes past the wick of this candle. That is the WWA version of engulfed. So now, through reverse engineering, we found our 15-minute POI. Okay, we drop it a bit lower. And this is all it is, backtesting, just going over and over and over. And eventually you'll start to just spot these things on your own. So, you know, you could say, okay, this is our 5-minute POI. Did we actually break this? No, we didn't. So I haven't traded USD CAD, but for GU and EU, even though we've come very close, you know, 0.2 pips, I still wouldn't get stopped out on GU or EU. But if say USD CAD has a normal, you know, let's say USD CAD has a normal spread of 0.3, you know, that's the average spread. Then all I'd do is I'd get this. This is bearish stops. And then just go on here, coordinates. Okay, so we're saying it's got a normal spread of 0.3. So I just account for that. You know, if you want, you can round up to whole numbers if that makes you happy. Now I'm definitely not getting stopped out. So, you know, it's important to account for spread if you're not trading a pair that has consistently 0 or 1, because you'd actually miss out on this move if spread did take you out. So that's important. Okay, again, where are we taking this? You know, so we're catching this here. So when I catch multiple moves on the downtrend, what I like to do is I like to have my ultimate take profit at the same point. So my take profit will go here. But before we do any of that, we want to, again, go lower because we're not actually trading this live. You know, I'd be comfortable with having a, you know, the thing with lower time frames is if you've already got a trade that stop loss is small enough and it's giving you a good enough risk to reward, there's no reason to be realistic. There's no reason to be really greedy. You know, it'd be different. I wouldn't trade this if it was like this. You know, if we were having a 10 pip, I wouldn't trade that. I'm from Hungary. Okay, so I wouldn't trade that. But here, you know, just with our 5-minute POI, 2.3, you know, and that's inflated POI. The actual zone is 2 pips, but we've inflated it due to spread. So yeah, but let's continue. Let's keep going down and let's see. So, you know, I'm pretty sure the 5-minute, let me check. So this is 0.5, which is roughly the amount we increased. So the 5-minute and the 3-minute PUI are pretty much the same. So that's a good sign. That's, you know, that's building confidence for me. Let's drop it down to the 1-minute. Okay, so we look on the 1-minute. And on the 1-minute, we see, okay, within our 5-minute POI, this would have been our entry. Now, I personally wouldn't, you know, what's the difference? You're looking at 0.6 pips. For me, just getting tagged into the trade, you know, 0.6 pip, I wouldn't really worry too much about 0.6 pips at the moment. Maybe eventually I will. But to break this down, this 1-minute POI here is our highest POI within the 5-minute. This has been mitigated. This has been mitigated. This has been mitigated. So this is all fine. Also, we're showing bearish order flow. Mitigation. Mitigation. As you can see, even though structure is not obviously bearish on this 1-minute, like, you know, we're sort of messing around, making equal highs, coming above, you know, maybe you could consider this a break of structure and we're actually going to the upside. But if you look at order flow is very bearish, sorry, not bullish, very bearish. We're mitigating to the downside. Every time we mitigate, we come down. So even though structure is not making it clear, order flow is. So yes, And then we've got no other POI within our 5-minute zone. I think our 5-minute zone is something like this. So this is our 5-minute zone. You know, the only 1-minute POI that we have is this. So it's very likely that we will come up to here. But at the same time, it's not, whilst I would be quite convinced that we would come up to there, it's not, you know, going from 2.3 pips to 1.7 pips. I'd happily take the 2.3 pips if it means that I'd 100% get tagged in. Because sometimes what we'll do is, and I'll show you. Wait, I think I've actually got an example on GU, unless I've deleted it. Oh, I've deleted all my things. I'll find it. It's fine. But basically, we want to get into that trade. You know, so we take it down to, all right. So now we're looking at it. All right, let's draw it out. Let me go to 5 minutes so I know what we're drawing. Jesus. Yeah. Oh, I know it was down, wasn't it? That's the entry. Drag that down. All right. Again, let's go over some take profits. So, where would I take profit? All right. Well, the first one. Let's have a little look. This is a bit of a difficult one because we haven't really got anything like areas where you want to take profit, which sort of want to like scream at you, but we don't really have any of that. So I think I'm not sure because I'm not very good at managing trades. It's something that I'm working on. So either with this, what I do is once we've done this, so either I just have this as the taking 80%, leave 20% running to here. And what I do was, so once we get tagged into the trade, I would wait for our next hard. Wait, how do I explain it in the trade? Right, I need to look. Hold up. Move stop loss to break even once 1 minute high low has been confirmed. Alright, so this is the opposite. No, wait, that's just wrong. 1 minute lower high. 2 lower low is confirmed. So this, so I would wait for the lower high to be confirmed after this. So what I would wait for, so I would move stop loss to break even. If this is our higher low, here, wait, I just write it with text. If this is our higher low, then we see break of structure. This is our lower low, lower high, lower low. So once I see price come past this point here, confirming this lower high, I will move stop loss to, come on, man. I'll move stop loss to break even. So that's how that works. And then, so, but again, this is something that I'm working on. And then taking it down to here, you know, we're looking at a 1 to 30 in, okay, but can we like, in a day and a bit, and then that's where I'll take out 80% and then leave this last 20% running, because and the reason, you know, you can leave that last 20% running even past here if you want. You know, you could maybe look for, you know, maybe we go into 8 hour and we look for a POI, like, you know, we've got something like this, even this, you know, you can happily leave it running to You know, we've got imbalance here, here, here. You can pick any of them. Like that last 20% is a runner. You don't necessarily have to take it out so quickly. You know, like I said, over here somewhere, you know, we probably reacted off this point here. Like, yeah, that's an imbalance fill. We reacted off the 8-hour imbalance fill. You know, I imagine if you pull it up on the 6-hour, you can probably define it even more. Same with the 4-hour. You know, on the 4-hour, yeah, this was our IFC. Like that imbalance was actually an IFC on the 4-hour that we came into and tapped out of. So, you know, just because I'm saying, oh, I put it here because I want to continue the trends, that doesn't mean that that's where it goes. Like, I'm still learning. Like I said, account management is the worst part of it's currently the part I struggle with the most, especially trading live, because I take my money out too quickly. But, you know, you wouldn't be complaining about, and this is just USD CAD over the, so, you know, we have this entry, you know, 1 to 40, 1 to 93, 1 to 50, and they are happening in a matter of, you know, all of this was in a period of a week. Oh no, it wasn't. Period of, so this was, oh no, it was here. Wait, nah, 2 weeks, and they all closed. Oh, and they all would have closed in 5 days at the most. So, you know, over the period of 5 days, you're looking at picking up a Arista award just on this one. I just click monthly. Just on this one pair, you're looking at picking up a Arista award of, what was it? I can't even remember now. 40, 150, 140, 180 in total. You know, that's not, I'm sure none of us are going to complain about that. Oh yeah, this was actually all within the same week. You know, and that's just on one pair. Like, you know, obviously you might not, you've only got to catch one of these to be up, you know, even with taking partials and stuff. Even if you caught this 1 to 46, you'd probably be up maybe at least 1 to 30, even if you partial it out a bit weird. So yeah, so backtesting just shows you the trades that you're missing. So even if you backtest all of these trades and you see, you know, trades constantly happening like this, where you have a 15-minute POI and we come back into the 15-minute POI, even if you don't catch a trade like that for a month, you know, you just can't see it live for a month. But as long as you're constantly writing down, okay, I saw this in hindsight, you know, what were the reasonings? Well, the reasonings were imbalance. You know, on the 1 minute time frame, we were showing, you know, even though structure wasn't perfect, we were showing bearish order flow. We had reasons to think that we were going to go down. We had reasons to think we weren't going to go past this point. You know, you're just building up reasonings. Like Waqar says, you're building a story. So even if you just do that for a month and then eventually you catch a trade like this, you catch a trade like it, brilliant. The moment you catch a trade like it, you will know, because you caught it in real time. You'll know the things you're looking out for, so you can go, okay, next time this happens, I have concrete reasons and I have concrete things that I'm looking for, so I know that I can catch that more often now. And the more often you catch it, the higher probability you'll catch it next time. And that's just, you know, that's just how it goes. So that's why backtesting is so useful. It's literally like, you know, going back to exams, it's like looking at the mark scheme and going and just copying the mark scheme in your answers. If any of you have done, you know, GCSE or A-level science, you'll know that's what you do for certain questions. For certain questions, you literally just copy the mark scheme because they come up so often. And it's the same with trading. They come up so often. And that's sort of how I manage my fear of missing out, because yes, I'm missing out on ridiculous risk to rewards if I do miss, but I know that they're coming back. Like, I know that I'm not going to be missing out on too much. So, okay, so next I actually want to go over one where the entry isn't really obvious. There's not always an entry. So you can't, don't kick yourself if you do find something. Say you mark out this 1 hour POI. We're marking out this 1 hour POI. We're currently, this is our thingy, our impulse. So we're in a complex pullback. This is the 1 hour POI. Nice imbalance. We're liking it. Let's check it out on the 4 hour. On the 4 hour, it's absolutely huge, but we'll still keep that in mind. That's our 4 hour POI. And then our 1 hour POI is this. If we saw lower time frame stuff here that actually guided us to be like, okay, we should actually get in here. But for me, this is not enough. This is our impulse up. We don't have a clear enough break of structure. We don't have a clear enough, like, okay, how do I explain this? Like, you could see it like this, where this is higher low, higher high, higher low, higher high. So this here is a break of structure, but this is not obvious enough for me. Like, especially in cases like this, I like it to be obvious. So
when you say it's not obvious enough, is that because of the, I suppose, the range between high low and high high, and so on?
And also it's more like we didn't really take this out. Like, this is still, this is still sitting here, and we didn't take that out. So if you actually drop it down to the if we go down to the 1 minute, let's see, I might be completely wrong, but in actuality we never closed. So on the 1 minute, on the 1 minute, this is our impulse. Even on the 1 minute, this is our impulse from here to here. And there was never a point on the 1 minute where we closed above this.
Gotcha.
So we never formed this higher high, which meant that this higher low is not valid, because the higher low is only valid if a higher high is formed after. So this is actually the higher low. And obviously we didn't come past that point. So that's not a break of structure for me. So, yes, you could say, oh, maybe we did react, but it's not, there's no need to rush into trades. Like I said, that they come around so often that there's no need to, if we're not sure, you don't need to take it. Yeah, technically missing out on trades is losing, but if there is a trade to be and a trade happens, there will be reasons for that. So if you miss it, don't panic and think, oh, next time I've got to get in. Backtest it. Figure out, what was price showing me that would have allowed me to get in. Just, you don't want to be getting in and not feeling confident. And this is why, even though I saw this, there was nothing that would have allowed me to get in on this. So this is our hourly POI. Now, our 5 minute zone is this. Maybe if you inflated your stop loss, you could have taken that, but there was no imbalance under this. There was no real reason to take this. Let's drop it to the 3 minute. On the 3 minute, the POI is this, but actually, POI is this, but because this is the first engulf candle. But even if you chose this as your stop loss, there's no real reason to take this. Like, we don't have imbalance. It's all been filled. We had a little bit of imbalance here, got filled. The imbalance was here. So for me, if we were going to react off a point, it would probably be here. But even then, I wouldn't take it. It would be different. It'd be different if we did something like this. Again, I do have certain times where I go against my rules. They're not rules, they're just guidelines. If we set up equal lows here, I'd probably take this 5 minute POI, but we didn't. I like to see clear equal lows like that, not equal lows where it's just.
I'm going to ask some silly questions. So the way that your kind of method is working is that you start from the highest point, and then you kind of go down to see where there hasn't been the first mitigation, and then kind of draw a line saying, okay, that's where I'm going to focus on, because as you said, there's a lot of gaps without a mitigation further along, so around between 1500 and 1800.
Here.
Yeah, there. But then, I'd have thought, okay, you'd have drawn some lines, and then as soon as the price started to react there and form sort of like double high around just after 9
Here.
o'clock. Yeah, I'd have thought, okay, that might be a POI, and without knowing too much, I probably would have entered a trade there.
Here, yeah, this, yeah.
Kind of there, or even below that, yeah.
Okay, yeah, I see what you're saying. Again, I think the problem is each pair moves differently. So if I saw something on EU or GU, I'd probably take it. But I don't know how USD CAD moves. I don't know if it respects things like that and it actually does things like that. And another thing is, yes, we're in a 4-hour POI, but how would I explain this? Okay, this is getting really subjective, which is the problem with trading, because it does get subjective. If we did this and we had actually made a move down and made a lower low on the 4-hour, and then I saw something like that on the 4-hour. So wait, how do I will this? All right. Say I saw this on the 4-hour, yeah. So we're doing this on the 4-hour, and then if I drop down to the 15-minute, oh, I know the 5-minute makes them look nicer, and we started to form these equal lows, equal highs, then for me, I would probably take this. But because this wasn't necessarily this wasn't like a pullback in a sense, because we hadn't formed the lower low, this 4-hour POI is too. I don't really know how to describe it, because it's
too shallow. Like this
4-hour POI is pretty much half of this move.
Right.
If that makes sense. Like it contains half of this move. So I wouldn't consider this a tight enough POI. Whereas if we had have actually, especially because we didn't make this lower low, so we could. The thing is, we could very easily come up, because if we come up past this point, it's not a break of structure, because on the 4-hour, this is our impulse. So we're just trading within the impulse. So stuff like that becomes less likely, for me at least. I haven't explained that very well. I will actually, after this, I'll go away and look at it, and I'll write down concrete reasons and I'll send them to you. But I just know that it's one of those things where I know that I wouldn't take it, but I can't tell you the reason why. Like sometimes it is just a guttural instinct, which sounds a bit weird, but
no, I understand.
Yeah.
Okay, got it.
I think it's probably more to do with, again, if I saw this on EU or GU, I'd take that, but it's probably also to do with the fact that it's USD CAD, which is something that I haven't traded at all. No, I traded it once and I didn't like it, so I've strayed away from it. But I hope that sort of answers it. If not, I'll, like I said,
No, it makes sense, mate. Thank you so much.
Yeah, I'll write up reasons. So okay, so we're going off this. And this is just kind of nasty, there's just nothing clean about this. There is, it's just awful. Like I wouldn't enter off this. The place I'd actually be looking for my entries is, I'll show you. 15-minute. Okay, so this is 15-minute break of structure.
Or just the trend, break of the trend momentum.
Pardon?
When you
Oh, right,
decide
yeah.
to order or wait for a time frame to put a break of, I mean like a break of a structure.
Pardon? So I can't hear you. You're a little bit quiet. That's all. Hello. Anyway, I'll go for it. Go for it. You keep you keep cutting out. Do you want to just write it in chat, and then I'll answer it? Oh, this wasn't meant to be a trend line, a momentum trend line. I was just drawing this to say that I don't even know why I drew this, but just to show like this move up, I guess. But anyway, so 15-minute break of structure is here. And then we left clear imbalance and a clear ISC here. So I'd wait for this to come up. We drop down to the 15-minute. And then actually on the 5-minute, this would be 5-minute break of structure. 5-minute US. So I'd wait for this here. But this is no longer valid for me because we formed lower low. This is just on the 5-minute. Lower low, lower high, and now we formed another lower low. So my 5-minute zone is this. That is my 5-minute zone. So we drop down to the 3-minute and it becomes this. 2-minute becomes this. You know, you don't have to shorten it this much, but I'm just showing how it does shorten. And then 1-minute, it becomes this. And that'd be the, you know, maybe I'll take a limit off that. I don't know. I haven't traded USD CAD. But that's the thing, like also getting fairly, how do I explain it? Like focusing on one pair a lot is very good because I can't describe like how, but you just sort of get a feel for it. Like the pairs do trade in certain ways, and even if you don't realize that you're getting the feel for it, you will get a feel for it. Like there are, like for example, with if I go over EU, there's plenty of times where we've actually come into a POI and we've broken 15-minute structure, but I still wouldn't take the trade because I'm like, it's somewhere along here. We broke 15-minute structure. It might have even been this. Like we broke 15-minute structure, but I was so confident that we were going to go bullish that I actually bought somewhere over here. I can't remember where, but it's just like I'd really recommend just focusing on one or two pairs because it can do wonders. You know, and also with this, you know, we'd be happy with the 3.9 pip stop loss, or even if you went off the 5-minute one, you know, you could happily take a trade off that. So you know, so what I'm looking for USD CAD is I want to see us come up to this point. Even if we go down and we, you know, we come past this point, I think I'd actually prefer it if we did this. You know, come past this point and then come down, and then I'd maybe look for one of our zones over here to be filled.
So if it comes down below the current lower low, where would your POI be? I mean, would you want to long it at some point?
Well, I'm still very cautious about going against trend.
Right.
Like, but if let's look at that. Let's look at that. Okay, let's look for a POI for it to come into. Okay, let's say we react off this 4-hour POI. Okay, 4-hour POI, and then say we set something like equal lows. Let me just, let's say we set equal lows like here, and then we FU them.
Yep.
And then we do this, and then I would, if an entry presents itself, maybe I take an entry from here, and I actually take that up to this POI.
Yeah, gotcha.
Yeah, and then I would actually consider this, because obviously we could react just from this imbalance fill. So, I'd consider this. I'd probably take 50% out here, because, there's a chance we just react from here and come down.
Sure. Yeah.
Because, with these zones, it's not a case of will we come to them. It's more a case of when.
I agree, and it may be that we gap up, and
yeah, we could just,
Yeah.
like the thing is, these are POIs, so they're points of interest. That's it. Nothing's definite. If things were definite, trading would be easy.
indeed, yeah.
Like it's as easy as that. Like, especially, limits can be scary, because even, at least with lower time frame stuff, you've got good reasoning at that time. Like, price action is showing you that it's going to go bearish, but with limits, you're saying, okay, I think it's going to reverse at this point. I think this is a point which is, is a lot scarier. It's a lot scarier putting a limit from a day ago, on a 15-minute POI with a 2.2 pip stop loss, but that's why we build up that's why we build up confluences. That's why we backtest, so that we can understand, we can have faith in ourselves to put these limits. And, if they don't work out, they don't work out. But part of the beauty of this risk to reward is you can lose 10, 20 times in a row. You just got to have one banger. And
Completely agree. I mean, that's the beauty of this, as you say.
yeah, exactly. Let me check. I did see something in chat. Let me check. When do you decide to put a pending order or wait for lower time frame, BOS, etc.? Okay, so let me just think about that, because I want to give you a good answer. Okay, if I can, okay, here we go. So well, I need to think. When do I? Oh, sorry, I want to give a good answer. I don't want to speak a load of shit. Okay, so I will put a pending order in 2 situations at the moment. One of them is on EU. I'll just show you it because it's a lot easier. In situations like this, where we have a lot of imbalance and equal lows or equal highs if it's the other way, and we've got a clear IFC. That is one scenario where I will put a pending limit. Let me think of the other one. I just had it. The other one is in examples like this, where again, it's got something to do with imbalance, but there is only, so within this 15-minute zone that I've marked out, there is only one IFC within that zone. So there's only, if we are going to react off that 15-minute, there's only one place to react from. I hope that answers it. Like, again, I don't like saying definites, because there is no definites. Like, I will 100% break these rules at times, and sometimes they won't even, sometimes I can't even explain the reasons why I break these rules. But that's the thing, like, they're guidelines, not rules. That's how you got to think about them. And eventually you want to develop your own trading style, and you're not going to develop that by just following rules. It's going to be you not improvise. I don't want to say improvising, but you twisting them, and you saying, okay, what if I do this, or what if I do this? Like, that's how it works. It's not just, I've got these rules, I'm going to follow them, because anyone can follow rules. And if anyone can follow rules, then anyone can be a successful trader. But we know that's not how it is. Like, not just anyone is a successful trader. So you've got to have your own views on things. And one thing I think is really important, especially when you're first starting backtesting, is you've got to accept that it will be frustrating. When you are backtesting and things aren't going your way and you can't understand why you're doing things. And the worst thing is when you think you understand something, so you try to, even if it's just applying it live, like not actually taking trade, not even on a demo, but just marking it out, and then it just completely disrespects what you've done and goes right through it. That's frustrating. But one of the things that you have to think about is that doesn't necessarily mean what you've been taught is wrong. The market can do whatever it wants. So what you've got to think is, okay, why did it disrespect what I put? And almost always there is a reason that you'll be able to find. And again, if there's not, just ask. Put it in the Discord. Like I said, from April and June, there are amazing traders. Like, you just have to look at the winning trades. Like, and everyone's friendly. Like, they'll answer. So just put it in the Discord if you're not sure. That's why most of the growth is seen in the Discord, because it's there to, pretty much steal knowledge from other people. So don't be like scared to ask or anything like that. That's that pretty much covers it though. Is anyone unsure on anything that I can go over? Any questions or anything like that? Also, would you like this? I don't know how helpful it'll be, but do you
It would
want
be useful
this?
to look at. If you can sort of cut and paste it on a text file and put it on Discord, that would be awesome.
Yeah, no problem. I'll just.
Thank you.
Yeah, are there any questions or anything like that, or are we all good?
There's always questions, but I don't have any more for now anyway.
Okay, well, if you do,
Thank you.
Don't worry to, again, just ask, like. All right.
Yeah, I don't have any questions, mate, but I've got to bounce now. But thanks, that was good. That was cool.
All right, nice.
Cheers. See ya.
All right, see you, everyone. I hope that was helpful.
Thank you.
Yeah, thank you, man.
Thanks, Cameron.
No problem.
Thanks, Rob.